Hey CPA candidates, it's Matt from Universal CPA Review. Thanks for checking out our video that goes through a cash to accrual simulation. This was a custom simulation created by the Universal team. It will help you understand how to use exhibits and certain cash basis information to ultimately calculate the accrual basis information that would be included in GAAP financial statements. While you can watch this video to get a good idea on how to execute a simulation like this, I encourage you to come check out the real simulation in the Universal platform. Go through the exhibits, attack it yourself, and then watch this video after. However, before we dive into the video, just a few things I want to run you through. Please subscribe to our YouTube channel. If you're studying for the CPA exam, join our Facebook study groups. The links are in the description of this video. Again, if you haven't signed up for a free 14-day trial, check it out on our website. And then lastly, please reach out to us to learn about any promotions we are running. And additionally, we have a spilt milk program, which basically allows you to switch over to the Universal course if you've already purchased another course and it just isn't working out for you. So without further ado, let's dive into the video. Slinga. So that is the company that we are focused on today. So the accounting department, they need to create some accrual basis financial statements, right, in accordance with GAAP. And right now, while they only have some very basic cash basis information, and they do have a ton of exhibits. So when we flip through the exhibits, which I recommend doing right at the beginning, you'll see that we have a comparative balance sheet for year 4 and year 5. There's several different emails. We have some invoices, we have some bank statements. So all of this types of exhibits, they will be used in this simulation. Now, since we have primarily cash basis information, and again, we're going to accrual basis, we are going to use the roll forward method. So we'll have to get the beginning and ending balances from the balance sheet. And then to figure out some of the cash basis information, we'll again reference the simulation prompt. We'll reference some emails, some invoices, and bank statements. So let's get started. So the first item we have here is revenue. So for revenue, under the cash basis, it's based on cash collected from customers. But we should know that under the accrual basis, we recognize revenue when earned and not necessarily when the cash is received. So when we recognize revenue but don't actually collect the cash from customers, right, we recognize that impact to accounts receivable. So when we go to our comparative balance sheet for year 4 and 5, well, we're going to need to take the beginning balance and ending balance for accounts receivable. So the beginning balance, which is just the end of year 4 balance, is going to be $2,430. Now we need to figure out the credit sales, right? Because that's going to be the amount of revenue to recognize during year 5. And then when we think about what decreases accounts receivable, well, that's when we collect the cash from customers. Now going back to the simulation prompt, it just tells us that cash collected during year 5 from customers was $180. Now I'm going to put that in there as negative because that reduces the AR account. And then our final amount here is going to be the accounts receivable ending balance, and that is $3,300. So this is the accounts receivable roll forward. It will help us solve for credit sales that should be the amount of revenue recognized on an accrual basis during year 5. Well, the only number that works in this roll forward and causes it to balance is going to be 1,050. So in our simulation, plug in 1,050. So hopefully that was fairly straightforward. That is the roll forward method, and that was for revenue and accounts receivable. Now on the next row, we need to calculate cost of goods sold, and obviously cost of goods sold is closely associated with inventory, right? When we receive inventory that we've purchased, well, we capitalize that to the balance sheet, and then we only recognize cost of goods sold when the item is sold to an end customer, right? We recognize revenue and cost of goods sold at the same time in accordance with the matching principle. So on the screen is the inventory roll forward. And again, this will help us solve for cost of goods sold. So we will need the beginning and ending inventory balances, and those are going to come from the comparative balance sheet. So the beginning balance, which is the end of year 4, was $3,720, and then the ending inventory balance was 5,880. Now, when a company purchases materials from suppliers that are intended to be used to make inventory that would be sold, well, that's going to increase our inventory balance, right? We're capitalizing that into inventory until we sell the product. And so we need to get to that cost of goods available for sale number. Now, from a cash basis perspective, that is going to be the amount of materials purchased. So that's not going to be on the income statement. That's certainly not going to be on our balance sheet. So we will have to reference one of the exhibits. So if we pull up the exhibit that has some email correspondence with our pal Sanjay, who's an AP clerk, well, he gave us the information we need. He said the amount of material purchased by supplier for inventory during year 5, it's in this table. Well, that totals to 3,160. So that's going to be a positive number that we plug into our roll forward. So now we have all of the information in the roll forward except for cost of goods sold, right? We have inventory beginning of 3,720. We had materials purchased of 3,160. That gets us the cost of goods available for sale of 6,880. Now, if we need to get down to an ending inventory balance of 5,880, well, that means our cost of goods sold was 1,000. So that's a negative number here. But again, if you look back at the instructions, it says to enter as a positive number. So enter positive 1,000. So on the next row, we have insurance expense. And what amount do we need to recognize? Well, when we look back at the prompt, it tells us that the company prepays their insurance each year, right? Well, that means it's going to be a prepaid. However, when we go to the balance sheet, I see a line called prepaid expenses and other current assets. Now that could contain, a variety of different types of prepaid expenses and other current assets. So what we need to do is go to the exhibit, which has some email correspondence with Samil. Now, Samil's in financial reporting. She pulled the trial balance information that makes up this financial statement line item. And look, it includes prepaid insurance, but it also includes prepaid software, prepaid rent, and deposits. So when we go for the beginning and ending balances for our roll forward, well, we're going to need this exhibit. And it tells us that the beginning balance was 100 and the ending balance was 300. So similar to the prior two types of accounts, right? Here's our roll forward again. We start with prepaid insurance beginning, which was 100. And then what would increase that account? Well, when we make that prepayment in cash, that increases it. Now we don't have that yet. The next line here would be the amount of insurance expense recognized during the year. And then that would get us down to the ending prepaid insurance balance, which we know is $300. So before we can solve for the amount of insurance expense to recognize, we need to get that cash prepayment for insurance that would have been made throughout the year. Well, there's two exhibits that we'll need to reference. So the first one is an invoice from Wash Up Insurance Company. And it looks like the year 5 premiums that we need to pay were $500. Now again, this is only an invoice. We don't know if they've actually made any cash prepayment yet. But fortunately, if we read the email correspondence with our pal Martha from Treasury, she says she went in, reviewed the year 5 bank statement, and it looks like the payment was made on January 28th, year 5. And then it looks like in the February bank statement that Wash Up Insurance actually cashed the check. Now she also tells us that this is the only cash payment made to Wash Up Insurance or any other insurance providers during year 5. So we should be comfortable now that the insurance prepayment in cash was $500. So now our roll forward is fairly filled out. We're ready to solve for the insurance expense recognized. So if the beginning balance was 100, we made that prepayment in cash of 500. Now that gets us to 600, and we need to get down to 300 at the end of the year. That means we recognized insurance expense of $300. Now in the roll forward, that's a negative number, but again, we have to enter that as a positive number in our simulations because that's what the directions say to do. So go ahead and plug in $300. So moving on to the next row, which is focused on compensation expense. Well, going back to the original prompt in the simulation, one of the pieces of information they did have was that cash compensation paid during year 5 was 1,320. So that's a helpful start for our roll forward. Now we're also going to need to reference that comparative balance sheet to get the beginning and ending accrued compensation balances. So looking at the balance sheet, it appears that the beginning balance was 5,200 and the ending balance was 6,380. So we have all the information for our roll forward now. So as you can see, if the beginning balance is 5,200, well, the plug is going to be compensation expense, right? Because that increases the accrual account when we recognize that. And then it only decreases when we actually pay that compensation in cash. So that's a negative 1,320, and that gets us down to 6,380. Well, the only amount of compensation expense that causes this roll forward to balance is going to be $2,500. So that means on an accrual basis, we would recognize compensation expense of $2,500. We are almost done here. Our final row is focused on income tax expense. So I'm going to set up the roll forward first so we know what we need to look for. So we need to get the beginning and ending income tax payable balances. And then we also need to get the amount of income taxes paid in cash. And if we have those three pieces of information, we can then solve for the amount of income tax that was recognized in the period. The first exhibit we need to take a look at is that bank statement for June of year 5 from First Bank. So when we pull up that statement, we see that on June 15th of year 5, they made a payment for income taxes of $200. So that means a $200 check was probably cashed by the government, right, for that income tax payment. Now, we don't know if this is the only cash payment that was made for income taxes during the year. So we need to go ahead and email our pal Martha back in Treasury. And she says in there that that was the only cash payment for income taxes that Slinga made during year 5. So we know that for year 5, total income taxes paid in cash was $200. So now we're ready to solve that roll forward. So if our beginning balance was $500, we need to solve for income tax expense, and then income taxes paid was $200, and that gets us down to $600. Well, that means we basically are going from $500 to $800. So that means the amount of income tax expense recognized during year 5 will be $300. So plug $300 into the simulation. So this was a challenging simulation. It had a lot of exhibits. But in reality, we learned how to use information from the balance sheet and how to prepare the roll forward and then think more intuitively about what we need to solve for so that we can get to the answer that we need to. Right? We referenced bank statements, invoices, emails. If a company were to do this exercise, it wouldn't be much different, right? This information is scattered throughout the company, and that's why it's very important for a company to prepare financial statements on a frequent basis so that all of this information is always right there. That way, when the acquirer comes knocking, they don't have to go through this detailed exercise, right? It's already prepared. So keep this in mind for the exam. Always remember the roll forward method. It will not steer you wrong.